6-5 is live here on a Saturday morning, making up for a Friday morning miss. We are back from Barcelona, Spain, Mobile World Congress. In fact, Dan landed his helicopter at his daughter's soccer game yesterday, and he literally is just back. Dan, how you feeling, buddy?
Hey, so the problem with that, Pat, is that now everybody's going to be looking to figure out whether it is true or not that I have a helicopter. And listen, I can't really speak to this. I can't speak to location. I can't speak to, you know,
How about if
whether
we
or
do
not I
this
have
though?
a chopper.
Dan, true or false? Dan has ridden in a helicopter in the last 3 months. True or
Um,
false?
you know what? Listen, I'm going to plead no contest and not
Okay,
answer
there we go. True or
that.
false? Dan lives on the top of a mountain where theoretically you could land a chopper.
Once again, I'm going to plead no contest
All
because
right.
that's what people
Okay.
do when they don't want to be accountable. So listen, it's been a great week. I'm back. I'm feeling good to be back. I'm glad that we got this in, buddy. I know you're actually on your way out to do a really tough week of spring break where, well, listen, in fairness, you're going to go on spring break. And then I so rudely said, Pat, I need to ask you to leave your spring break, go to Las Vegas, and 6-5 your little heart out at the HP event this week at APC. But then you go right back, and so it's not so bad. You get to hang out with me for a day, and we're gonna have a great week. But yeah, I mean, Pat, Barcelona was great. I mean, listen, I could do it in 3 days instead of 6, and I'd be happier. But it was a really good event this week.
I know, it's good. Hey, we have a very extensive show for you. It's the 7-5. We're going to be talking Salesforce earnings, Trailblazer DX show that's coming up. Microsoft has a new finance AI chatbot.
Did you say it's a 7-5? Did you say
Yeah,
that?
the
Tell me what
7-5.
that means. What does that mean? We're 7-5. Are you mean we're
Seven.
doing an extra topic? Is there a bonus topic?
Oh, we did put a bonus topic, and we could have put 10 topics, but we can't be the 10-5. I mean, we already talked for an hour, and it is Saturday at 7:15 a.m. Central. I don't know who wants to be listening to
I mean,
this.
there's not thousands and thousands. There probably will be. I mean,
Probably
some
will
of
be.
our audience spans the world. I mean, listen,
We are definitely global.
you're the world's
That
best
is for sure.
moderator here.
I appreciate that,
You.
and you're the world's best everything else.
No, I was talking about me about all of it.
I love it.
Yeah.
Hey, we're talking Altera spin out. They got a new mid-range FPGA as well. We're talking HPE earnings, HP earnings, Dell Tech earnings, Pure Storage earnings. And that's a good segue to say we obviously talk about publicly traded companies. Don't take anything we say as investment advice. You should probably just do the opposite. Or if typically the analysis we do doesn't actually align with valuations because Wall Street is just nutty. By the way, NVIDIA is $2 trillion as of yesterday.
Yeah, NVIDIA had $2 trillion. So
AMD is over 300 million at
300 billion to AMD. Supermicro was added to the S&P 500. And by the way, a couple other little stories just to kind of tease these out ahead of time. Grok had a huge acquisition, that is now creating the next wave of Grok Cloud. We've talked a lot about that. Like this AI momentum is creating a strong wave, Pat. And then, I shared a really funny story. There's a bunch of stuff going on about OpenAI, but Elon Musk is suing them, which is super interesting because you got to go back in the history and look at the Elon Sam Altman history.
Yeah.
They were friends, they were buddies along the way. So it's getting contentious there. We're going to follow that one, maybe even talk about it sometime in the show. And I had a really funny tweet. There's a tweet that got about 2 million views about a Starbucks store in San Francisco that had a roundup for a local charity. A local non-for-profit. That non-for-profit was
OpenAI.
OpenAI. And I don't know if this is real. So I want to be very, very clear. I don't know if this story is real, but if this is real, that is epic. And it is factual, though. It is factual. They are local. Yeah. They are a non-for-profit. I don't think they need everybody's 40 cents on their Starbucks cup of coffee. I do think that's a little bit misleading, but you know what, Pat? I think we should put a similar thing going on at the Starbucks here in Austin. Round
A
up
little
to
bit misleading. It's a lot misleading.
Round up to a local business. Moortrum.
I love Moortrum Insights and Strategy.
Maybe that'll be our non-for-profit,
Exactly.
where we do things for small companies that need great advice.
Yeah, let me be very clear. We are not a non-for-profit. In fact, there is a dollar mark that gets me out of bed these days, and it's a lot higher than it was a decade ago. Oh, anyways, man, we are drifting like a freaking tugboat.
Oh, people love that. That's their favorite part of our show. Nobody wants to hear this stuff about these topics. They like when we banter. This should just be the banter hour. All right, we'll do it. Whatever.
Dive in. Dan, I'm calling your number. Microsoft brought out a new finance AI chatbot. This is not the first. There has been AI inside of Excel as an example for a long time. What's new here?
So Microsoft has worked on this theme of various copilots throughout the company. They've had Copilot for sales, Copilot for service, and now they are introducing Microsoft Copilot for finance. And I mean, the truth is that within every function of the business, there are very specific applications that can be more efficient, more productive, easier, and can be integrated with Copilot. This is the next step, the next phase. You know, Pat, you and I, we'll just use ourselves as an example. There's a lot of reports that we ask from our team, right? And as our companies have grown and our teams have grown, and we now have our systems, we have ERP, we have CRM, but of course you've got, usually in most companies, financial analysts are working through piles of CSVs, right? They're doing, collections or data reporting. They're doing AR data reporting, receivables. They're doing payables analysis. They're doing just different kinds of workflows that are critical to a business performance. And a lot of it's being done by hand. A lot of it's being done, you got to either extract the data out of your ERP system or you're working out of these spreadsheets, and it takes time to make decisions. So what if you could make it easier? You could, connect your financial system. You can, by the way, Dynamics, SAP, I think over time you might see that extend into others. You can build workflow automations. You can build guided actions. You can basically get through a number of different, reporting capabilities. What about a cash flow forecast, for instance? How would you want to work on that? And by the way, I got to see the demonstrations here. And so you can basically use a Copilot. It can have a number of pre-canned sort of capabilities. And then, of course, you can trigger and ask it different questions to get an idea. How can you look at certain business behaviors right now, like the inflow of sales orders versus the outflow of project work, and then be able to deterministically know, will we be creating more cash or less cash? It has to then, take into consideration typical pay cycles. These are a lot of things that people don't think about. Oh, we sold, so the business is going to be fine. Well, what if, you've got to do X amount of work, but your average payable receivable comes in 120 days, but your average payable is in 30 days. After a certain period of time, that discrepancy is hard. So first of all, I love this for smaller companies because smaller companies tend to have a lack of resources to even do these kinds of evaluations. Bigger companies have so many of these evaluations to do that it also is very useful to potentially be able to pull these together. But this goes back, Pat, to more of just finance is one more tentacle in what copilots are doing to enable businesses, finance, sales, service. And I really like that. So look, this is a step in the right direction. You got to, be able to streamline your processes. You want to be able to use these tools. You want to be able to do a generative inquiry, right? So you can talk to your system, ask it a question in a natural language, and then be able to get highly valuable insights and, even generate something like an email out, to make a collection or to notify someone in your org of what collection needs to be made. These are just little examples, but this is what it really is to me. It's a number of small financial capabilities all strung together to help a company run more effectively.
Wow, Dan, that was some smooth analysis there.
Was I a smooth operator?
No. It's interesting. As I was looking through this, I tried to delineate between whether this is a new category or doing something a lot better. And it's almost both, right? I think you said it well that we're doing a lot of this via spreadsheets. We're also doing this with executive dashboards as well through either Tableau or NetSuite or Microsoft 365, things like that. But I think that this could be a new category, an incremental service that you would want to pay Microsoft for. And I think it's right in their sweet spot of productivity, which I think is good. I like the ingest from external sources like SAP and things out of the Microsoft Copilot Studio. I wish the company would have talked a little bit more about data, right? About how it can pull in data, how it can protect data that they pull in. Kind of like, as we'll talk, Salesforce's data cloud. I wish they had talked more about that, and maybe they expect you to know how that data is pulled into Microsoft Copilot Studio, but I don't think a lot of people do that. And I guess if you were serious about it and you were a large company, you would get there. But it was a little bit of a question. Now, Microsoft Copilot Studio, consider it as a kind of a clearinghouse for APIs. They've got over 1,000 pre-built connectors and plugins, Workday's in there, SAP's in there. But how do you pull in custom data? But then again, Dan, like you said, maybe this is more of a small and medium business solution where you're thinking less about that. I guess medium businesses they have an IT staff, they do worry about this. Maybe this is more of a small business.
Well, I mean, obviously you can CSV data outside of an ERP system and drop it into a spreadsheet, use it for things like FP&A, different planning necessities. Of course, it's another co-pilot they've worked on this financial planning analysis, but also for just finance collections, accounts reconciliation. I mean, Pat, this stuff takes tons and tons of time and brain matter. And, you've got, an efficiency thing, Pat. I call it the whisper of the street that no one talks about is companies are looking to reduce staff. And I know this is not anything at Microsoft.
Dan, did you say this out loud?
Yeah, well, I'm not
that out loud, Dan.
Listen, I'm not saying they're saying this here, or in this case, it had anything to do with Microsoft.
Listen, Microsoft would never say that here.
No.
They would say augmenting.
Well, what I say, Pat, is you got to prune the tree for it to grow healthily.
Yeah, it's so funny. I said that same thing. I don't know if I copied you on that. I put that in a tweet the other day. So
I probably did. I've been running around town saying that for like the last couple of months. It's become kind of my ethos about business is like, healthy plants grow right when you prune them. And it sounds somewhat cynical, but the fact of the matter is it's how you create a fast growth culture. But it's also, this is where the comments from like IBM's Arvind Krishna and others that got kind of reamed for saying AI would reduce. It's not a permanent reduction, but if you have the exact same roles right now and you look to have those in the future, a certain percent of those roles will be eliminated by AI. And guess what?
Yeah.
Every industrial revolution is going to happen here. The question is what gets created. And that's still a bit more of a mystery. We're not going to go kick another wormhole to go down, but I like talking about these things. It's interesting.
No, it is interesting. And I think our audience appreciates kind of us going off the rails.
Pat, I want to let you know I got to let you go. I've created DanBot too. I'm going to pod with myself because I'm awesome.
I love it.
I'm awesome. And by the way, you can be the third bestie from time to time.
Did you say I'm awesome?
I said you're awesome. I said it could be DanBot, and you can join periodically when DanBot's sick.
I don't know. My son might be creating the Patbot. So he did. Pico did actually create a Patbot. I'm not kidding you. Based on all my Twitter stuff. And
your son's a rock star. That's why all the big tech companies are lining up to bring him in. But I think he's going to become an analyst.
I don't know if he can afford to take the pay cut to be an analyst. To be honest.
Well, I got an idea. We'll get around to it.
We'll talk. I'll have my people talk to your people.
Have his people talk to my people.
Totally. Oh, that's so good. I love that. Oh man, we are just drifting all over the place. Hey, let's hit the next topic. So Salesforce had their earnings, and it was also a preview of the Trailblazer DX conference. You know what? I'm going to let you hit the numbers. I think what I want to hit is the sermon that CEO Mark Benioff gave on the call. It truly was incredible. And listen, I'm not like a million view go viral, but I had 60,000 people, actually, I guess 80,000 people between LinkedIn and X kind of come in and read this. But it was a sermon.
Benioff read it. I mean, I'm just saying.
I know Benioff liked it. By the way, right after you, I'm pretty sure that you motivated Mark Benioff after you liked it for him to go in and like it. But a lot of his senior staff, his chief of staff, a lot of great. So I must have said something of interest, and I don't recommend, hey, you got to go and look at this, but I would recommend going in and listening to this and reading the transcript. It was one of the things that really hit a sweet spot, Dan. I mean, what have you and I been talking about forever about AI is that you've got to get your data platform in order, right? And what's new about generative AI that's different about machine learning is you're commingling data types more than ever. And, true Salesforce spirit, they talk about the customer needs and not just the customers with what CEOs were looking through AI. And Dan, I've heard there's a lot of alignment with what you've been saying on shows, which is productivity, higher customer value. And that's something that I hit on a lot. I call it stickiness. And finally, increasing margins, which really is a result of customer proximity and lowering costs. And it was good, but he went right after what he characterized as all amalgamated, stolen public data sets, without saying, how do you say OpenAI without, and Gemini from Google without saying Google and Gemini and OpenAI.
Just real quickly, there is a truth to it. There's two sets. There's the data that all these companies have used that have taken every publicly piece of available data that they could scrape off the net, and they've used that as a training set. And then there's companies that are building things based on proprietary training sets. And who have we not from the very beginning said where the real value of this is going to lie?
Yeah, I mean the real value is just what Mark said, right? And the only two models I'm aware of that actually cite their data sources are those from IBM and those from Salesforce. I had my AI model expert, Paul, kind of dig into, is this legit? But Salesforce actually has their own models. You want to bring your own model, you can bring your own model. You want to use the Salesforce models, you can do that too. So it was good. And even made a pretty funny comment about hallucinations are not a feature, and he talked about that airline's chatbot story when the chatbot actually made up some offerings that didn't exist, and the end user took them to court, and the airlines apparently had to actually pay what the chatbot offered. So the company liability from
the free truck.
I know it's straight. See, I remember the truck. I don't remember the airline that he went through. He didn't name names on this one, but it was pretty good. And then he talks about the ecosystem, right? Essentially trapped data inside of Snowflake, Databricks, Microsoft, Amazon, Google. And he said, put your hands up if you're using Snowflake every day out there, right? It was just absolutely hilarious and true. And Dan, what did you and I say 2 weeks ago on the Cloudera stage, which was essentially, we didn't use the word trapped data, but we said having data that's spread across on-prem, colo, private cloud that's on-prem somewhere, and public cloud and SaaS. And that's trapped data. And it's trapped data gets back to the commingling of different types of data with Gen AI. So, hey, did I love this just because he's affirming what you and I have been talking about all the time? I don't know.
Yeah, well, you know,
Maybe.
Pat, it's not a topic without a victory lap.
Totally.
It never
By
makes
the
sense.
way, possibly my favorite, which is what he said about NVIDIA. He essentially characterized NVIDIA as being the Levi's jeans of the gold rush. And, who's the gold? It's Salesforce. Then he said, I love NVIDIA, by the way.
Yeah.
So it's just, it was classic. Getting down to brass tacks here, I mean, Data Cloud is the punchline, right? Data Cloud is the data and metadata service that is, by the way, fastest growing product ever in the history. I didn't get the stats on if that's a percentage, dollar, what it is. 25% of fourth quarter deals over $1 million had Data Cloud in it. 7 trillion records ingested in the fourth quarter. Okay. So it's a big deal. And again, you think of Salesforce as CRM, they're going for it. They want Salesforce Data Cloud to be the data cloud for all of your data. Now, what they could be doing better, which again, I don't think they do a good job at. They don't do a very good job explaining that that data cloud is irrespective of where your data is. How do I get this on-prem? MuleSoft has a lot to do with this. There's APIs, but I really think they need to go the extra mile and do better talking about how you can leverage on-prem data. Because what is the biggest question that we get from enterprises, Dan? How do I activate my on-prem data in this generative AI world, right? Is it RAG? Is it something different? Is it some API? Is it metadata that I have to create on-prem that I ship to the cloud? It's a big question. So the end of the sermon, Benioff said, hey, there's nobody else out there that has anything like this. Text me or email and tell me what you think. And let me read this. Because if you see anyone else being able to deliver on the promise of enterprise AI at the level of quality and scale and capability of Salesforce, I'll be very surprised. Anyways, check out Trailblazer DX. I've got my data analyst, Robert Kramer, attending, and I'm looking forward to it.
Well, that was a sermon.
That was my sermon on the sermon.
I appreciated very much. I maybe even cited him a few times in calls we had with some other CEOs, because we talked to a lot of the CEOs of these companies this week that reported, especially in the infrastructure side and on some of the AI hardware side, and kind of asking those questions. Pat, NVIDIA's 80 to 85% of these AI project bombs, they're controlling the entire margin and keeping all that margin. And so these companies are talking about AI, but it's like, how well are they doing from selling, AI servers? It's clearly, and we'll get to Dell later, it can help when you report it correctly. But when you're talking about operation and contribution margin, there's a pretty large gold rush to be made on the inference side of things. And the inference is going to be done on the data that's going to be coming out the enterprise. So, we had a great conversation this week with the CFO of SAP. We've had some conversations with the folks at Salesforce. Number of conversations with the leadership at ServiceNow. By the way, we're going to have an announcement around that, something there pretty soon. They're building the software that is going to be enabling companies to be really profitable and productive. And there's a lot of profit in that, Pat. The profit scale in software is huge. And by the way, NVIDIA gets this. Like, sometimes, to Mark's comment, like, what he doesn't get is, like, I actually said a long time ago that NVIDIA's valuation was trapped in its software, its systems, and its frameworks. And the hardware is just the kind of thing that goes out the door. The biggest risk that they have, besides margin contraction from competition, is margin contraction from competition that builds frameworks and software that allows people to develop applications for AI that don't require their really, really expensive hardware.
Are you thinking about more like ServiceNow?
Well, that was what I said. Like, ServiceNow is for instance. I mean, they're certainly partnering with NVIDIA deeply. Everybody is. But there hasn't really been an alternative. But Mark is on the right track with what he's saying, but unfortunately, kind of like my op-ed about NVIDIA, it's going to depend more on how it ages than how it sounds right now. Because right now it's provocative. Longer term, though, it's the truth is if growth does contract and slow, and then dollars in AI start to move to Salesforce, for instance, where the money that's being made on the margin is, hey, we've added all this data cloud business and all this Genie revenue, and our customers are spending 35% more on average. They're bringing in tons and tons of data into the data cloud, running all these applications, expanding to use more of our applications. So it goes back to the Copilot for Finance. It's an application of AI, but how does Microsoft make money? And we know that it's the $10 per, $35 per for Copilot. But when you have hundreds of millions of users, that can be a really, really attractive business model. For these other software companies, that's where it's, hey, how quickly can they ramp revenue, add to margin, et cetera. So, by the way, they beat.
Yeah, I think
I'm not gonna dive too much into the earnings, because you know what, I think this was a way more interesting conversation that everybody could read. But they beat on the top, they beat on the bottom. I believe it was kind of a muted guidance. It was a softer guidance, and I think that's why the company didn't get like a huge boost from it. One of the things I said in one of my comments to the press was basically, I expect a little bit of talk about the AI contribution to revenue. It sounds like he kind of got around it a little bit, Pat. I didn't get to listen to the whole call with his comment about the fastest growth. But again, my thing has been, Pat, fastest growth is one thing. Fastest growth plus very specific, like Azure added 3%, 6%, like those guys, like Dell 40% order book. Like, people want really specific numbers. I don't think we quite got there yet, but it's getting closer.
He didn't, and they got some really good questions on that, and that is a question. Like, wait a second, Mark, if the AI is so great, why are you still in 10x% growth range? And what I loved his answer, and it makes a lot of sense. What do we always say? You've got to get your data platform in order before you light these things up. And that's exactly what I think his customers are doing, is getting your data lined up first and then activating it. Great conversation, man. We're going to be on for the next 2 hours.
Sorry, dude. I know you've got to run. So if I just
no. Anyways, let's.
I woke up early for this. I want to ramble a bit. I've had to, you've kept me on.
Dude, I am not asking you to not ramble.
I'm kidding.
But hey, let's jump into Intel's Altera did a spin out and brought new mid-range product out. I mean, what's with all the excitement of FPGAs now?
Well, look, Pat, I mean, there's a couple things going on, right? So this is a reminder. Altera was a company that Intel acquired years back, became their PSG group. And now just this last, was about a year ago, they announced that they were going to spin the FPGA business back out, a little bit in the style of what they did with like Mobileye, where they spun it out, but yet still track and hold the majority of the stock. The way it's pronounced is Altera, an Intel company, but it is standing alone. It is being run by Sandra Rivera. Sandra is someone that we work very closely with. Most recently ran the DCAI business for Intel. She's at the helm. They are planning to, it was pretty clear from the onset of this, that this will be another public company. I think a lot of this comes down to, Pat, the desire, let's talk about, a company like Lattice Semiconductor, which 13, 14 of the last 15 quarters has shown remarkable growth, high margins.
Yeah.
And has operated really in the low to mid-end range. And so all these other companies like Xilinx and Altera played a little bit higher up in the range. And I think Altera sees the opportunity. Pat Gelsinger sees the opportunity. Sandra Rivera sees the opportunity that the, field programmable, which is, the FP, is designed for, is an important design right now as companies, the ASIC. Sorry, there's so much to talk about, man. My brain running all over the place.
Dude, it's
ASIC is this really sexy topic right now, right? The Grok chip, the Inferentia chip, the Samba Nova chip, and then of course you've got the kind of like the TPUs. You've got this is suspected NVIDIA getting into some of this themselves. You've got Microsoft doing it, Ampere's partnering it. And the thing about the ASIC is it's really hard to do, takes a long time, and if you make a mistake, it's not very forgivable, not to mention Intel, what they're doing with Gaudi. The field programmable isn't going to be necessarily the replacement of that, but for certain workloads, it is an incredibly robust way to build something that has some flexibility. So think about like the in-between, the full programmability of a GPU. Think about something that's more like a more specific chip use case that still leaves an amount of programmability into it. And so the opportunity to do this, I mean, at the high end, you can do almost anything you want with this. And it's very expensive. I mean, Xilinx was a $40 billion acquisition for AMD. This is a very valuable type of technology. But in the mid and the lower range, being able to do a number of different, programmable things to have, easy to incorporate AI, be able to play in that segment, be able to operate on top of open frameworks like PyTorch and TensorFlow, being able to, work against standards, whether you're building for connectivity and Ethernet or memory and CXL. There's just a lot of capabilities top to bottom in this. And so I think they see the big opportunity in the business. They see the growth in the category. They actually see the fact that there isn't sort of a known large competitor in the wild. There's large competitors that are business units inside of businesses now, but now they can be a 100% FPGA focused company in the wild that's putting mega resources. And, I don't think this is so much shots fired at our friends at Lattice Semiconductor, but I do think that this is a clear signal of intent that they see them coming up the stack and how successful the company's been able to perform, and saying, we've got great assets, we've got great historic research, we've got a strong go-to-market sales force, and we see value in programmability. And I think it's also just showing that the category as a whole has a lot of upside. And like I said, across many things, low power, networking, communications, and then of course I mentioned AI. So I'll leave the launch new products to you in the mid-range, Pat. I'll leave you with that. And of course, whatever you want to add about the overall launch of the business.
Yeah, so just stepping back here, what are FPGAs used for? Two things. They're the on-ramp to ASICs, meaning a lot of the time, or a CPU design. So before you harden something and you go from simulation to creating an FPGA to then creating hardened silicon. So for instance, when I was at AMD and we did Opteron, we created an FPGA design, which was gigantic, by the way, to get closer in off of simulation before you spend a ton of money hardening that silicon. FPGAs are also used as the main brain. It can be used as compute. It can be used as I/O. It can be used in many different AI applications. And then when you add on top of that, putting an FPGA plus some hardened silicon, like for I/O or an AI block, it gets even more interesting. And the trick has always been to come up with the right software, because it was hard to program these things. And sorry, the other application can be when you have a standard that's midstream, like all the initial 5G silicon that went into wireless edge were all FPGAs, and then after the standard got fully baked, most of those chips got transferred to an ASIC. But that's kind of where it sits in. It's a lot more programmable than an ASIC, and it's also time to market is probably a year quicker than an ASIC, but it's not as sorry about that, folks. Not as programmable as
sneezing on the air
as a CPU. But anyways, with that background, I'm gonna give hats off to Lattice, who really, I think, kicked off all of this competitive action. And I don't think we would have seen this activity from Altera without it, because Lattice came in with brand new designs on the low power, low compute capability. And they also launched a brand new mid-range that they're getting a ton of design wins on. So I think that really motivated the rest of the industry to move here. Altera has 4 different layers, right? They've got 9, 7, 5, and coming soon is 3. Agilex 3 competes directly with what Lattice has today at their low power. And the Agilex 5, which is mid-range, is now broadly available. So competition is good, and they've got 3, 5, 7, and 9 for all these. I guess the question is, how quickly can Altera get refocused on this and wake up every morning that this is all they do? And the reason I bring this up is because Altera, for many years inside of Intel, the thesis was we were going to put FPGAs inside of Xeons, right? Processors, and that didn't end up panning out very well. So how quickly can the company get focused on this? We're going to have to see. And then, by the way, AMD Xilinx, what do you have up your sleeve? And are you going to focus and bring out some new designs on modern manufacturing techniques? Whew. Who knew FPGAs would be so exciting?
I don't know.
Hey, let's go into an earnings barrage here, an earnings cornucopia. We're going to get HPE, HP, Dell, and Pure, so stay tuned. So HPE, it was pretty mixed. And, in fact, I appreciate the company acknowledging that, but some very bright spots on earnings per share where they beat, right? They had record gross margin percent and some really great progress on ARR. There were some hiccups here, challenged quarter on quarter comparisons. That was one. They were blowing it out on the edge for so many quarters, right? 50% growth, 40% growth, and that's tough. And like we saw with Cisco, slowing. Well, actually, let me turn that back. Cisco had booming edge network, and HP talked about slowing campus network demand. I don't know if it's share shift. I don't know exactly what's going on here, but I need to do the double click on there. And like we heard from Dell, limited GPU supply availability. Wah, wah. Anyways, I don't think that this doesn't change my long-term prognosis on the company. This timing of large AI system acceptances is a challenging thing. Essentially, what that means is either they can't get it to work, or they can't get it to work correctly. So this has become I think this is the second or third quarter that this has come up. HPE has has the top high performance computer system, but it has a bunch of them in the in the top 5. So a lot of good, but pretty mixed as well, and very muted response from the street.
Yeah, look, the new normal for this quarter has been revenue deceleration with good bottom line management. And that's what solid leadership teams are doing right now. They're working against the backdrop of a still complex macro. Let's be very clear. It also works against the backdrop that guidance has been adjusted. So, when we miss right now, we're not missing against what were kind of higher expectations that came from a few years past. The last year, or especially most of early 23 and late 22, was the beginning of what I'd say an adjusted guidance period. It's funny, I saw something, Pat, on the Twitters, and it was Brian Sazi, from
Bloomberg.
No, I think he's from Yahoo.
Oh, Finance. Yahoo Finance, yeah.
And he said, he put this out there, and let's share it because it's interesting. He said there's the Mag 7 stocks, and then there were the other 493 doing something about the S&P 500. So he looked at earnings growth at the end of Q4. And so it was Alphabet up 51%, Amazon up 304%, Apple up 13%, Meta up 197%, Microsoft up 26%, Nvidia up 489. Tesla was actually down. So the Magnificent Seven on average had 56% earnings growth. The entire index had an 8% growth.
Yeesh.
And if you took the seven out of the index, it didn't grow. They were negative. And so why I'm saying that is that's the 493 companies doing something else. Like this is a fairly common. So they actually did good on earnings, overall by being able to beat. But the lack of earnings growth is actually the standard now. So that's why you're seeing only a very small number of companies pop. This is not a widespread rally. This is a very narrow rally. You got Supermicro, you got, Nvidia, you got Microsoft, you got there's 10 companies. It feels like they go up, and everything else is just kind of floating. Here's what I liked about the earnings. I'm just gonna be a broken record. Every quarter I say, look, I'm the ARR order book and the GreenLake business to me is everything. 3 years ago, 4 years ago now, and I talked to Antonio on earnings day, and their CEO Antonio Neri, and he pointed out too. You're shifting the business. You're moving from more big iron to more subscription. That's always going to be a top line offset, and you're trying to get very very quickly to strong ARR numbers. They had their fastest or second fastest growth of ARR since 2019. They saw their order book growing substantially. They're still obviously spending and investing and returning to shareholders. And they also added 3,000 customers on a quarter over quarter to GreenLake. So that density of customers for GreenLake is really, really important. So some good things in it. I mean, look, when we get to Dell at the end, you're going to see about why the difference can be in the margins. And it depends just on a little bit on what you say on your earnings call and how much you're specifically able to articulate your AI story right now and the value it's creating. And the companies that are getting really prescriptive here are getting a big result. HPE has a big influence on networking, a big influence on compute in private cloud with AI, but I'm not sure the market's fully appreciating the AI play. And beyond, the slower revenue, because I don't think Dell was actually up on a year-over-year basis revenue. They just beat.
That's right.
They beat the expectation. So we'll get back to that. But they were very prescriptive on the AI part, and people were able to back that in out of the order book. All right, let's keep going. We're gonna do the 628 today, 725 today.
Well, let's jump into HPE earnings. We're
both in real time, Pat.
Yeah, where both you and I had the opportunity to talk to CEO Enrique Lores. We were in Spain in a hotel. I don't know, what was it, like a conference room or something?
Yeah, like a little conference.
At the end of the day,
a little conference room. Yeah, we were hiding in a conference room. Pat, we don't like to miss these calls. This stuff's important to us.
It is.
So hey, here's a quick rundown. Similar to what we just talked about with HP, no longer related really in any way except history. Now they had met the street on earnings number, and they fell a little bit short on the PC number. There's an interesting kind of inflection here, and we asked about this, and I think you and I have the right assertion to what's going on. The PC correction and getting back to growth based on the longer term macros, but also based on the shorter term sell-in is real. The sell-in has been substantial. We saw big client growth numbers from AMD, from ARM, from Intel that are indicative that this cycle and for HP, the compute client computing spend is coming back, but it hasn't fully returned. We've seen sort of the inventory burn off. This was a big part of the trend line, was these companies got socked with inventory when the slowdown happened. And they spent a lot of their time trying to sell off. So they had to sell out before they could sell in again. So we're in the phase right now where you can believe new designs are being built, chips are being shipped. That's creating momentum, but that's not necessarily leading to recognizable revenue in the short term. It's leading to either an increase in order books for some of these companies, or B, sort of just a more optimistic tone from these CEOs that are saying the selling is coming because they're having to buy the silicon, which is why all those chip companies are seeing momentum. He did say they gained share in certain parts of this PC, which is really important. So despite the fact that they didn't even hit their revenue, that means they still outperformed in the category somewhat significantly. Now, there's a range of ASPs, and of course, different companies will tell you different things. Dell will tell you, they're maybe ceding some share because they're focused on higher end ASPs, selling prices on units. But I tend to believe that every company wants to win at every ASP. It's just deciding how badly you want to win and at what margin, how much cash you want to be creating. So, my overall take, or maybe my most interesting inflection from the conversation was, you and I think, have this kind of second half 24 thing with AI PCs that we've both been talking about. I think maybe what's come to my conclusion after these conversations, because we also spoke to Dell, or I had some conversations with Dell as well. I think you did. We've been talking with Lenovo, others. Is when that cycle becomes bigger for the OEMs versus when it becomes big for the chip makers. I'm beginning to believe the second half of 24 is going to be a chip maker boom for PCs, but that the actual sellout that's going to be required for, an HP, Lenovo, Dell, Samsung, and these others to see big growth might not happen quite as quickly. And that's just from these, CEOs. What did Enrique say? Really, he sees that Enrique Lawrence, CEO of HP, he really sees it being more of a 25, 26 tailwind for the company.
Yeah, trying to piece this together, and I'm going to focus on the PC group, not hit the printing group.
Yeah.
It was just kind of pluses and minuses. I mean, both Dell and HP saw declines. Lenovo had gains, and while Lenovo didn't come right out and say that PCs were up because IDG or phones, tablets, the size of the phone and the tablet businesses inside of Lenovo is very small, and Lenovo had a 7% growth. So Lenovo seems to be gaining market share, and they seem to be gaining revenue share, which is fascinating to me. And the good thing for HP, though, if you're losing unit share and you're losing revenue share, that's a really sad place to be. But at least they gained unit share. What I'm still I can't figure out yet is how Intel was up 30%, AMD was up 60% in PCs, and most of the PC makers were down. And I know it's not a 1-for-1, but max, you've got about a 6-week delay. And then you would expect the forecast to be up if all these chips are coming in. It could be just a mix shift. So
channel stuffing?
Possibly.
I don't know. I just, because like you said,
I've asked this question to every one of the companies, and I haven't gotten an answer yet from anybody other than it's an offset. So I'm almost thinking that AMD and Intel might be stuffing the channel with it,
or just a prediction of growth or buying ahead, risk reduction.
Yeah, but wouldn't that be coming out in the forecast, the PC makers? Anyways, I have more questions than answers here. And just to put a spotlight on the AI numbers. Oh, wonderful! I missed my bookmark here. Yeah, Antonio said, "Hey, 3 years after launch, AI PCs will be something between 40 and 60% of sales." I got to tell you, that seems just so conservative to me. But then I step back, and if you look at, I think most all of notebooks will be an AI PC. It's the desktops that are a TBD, because the processor makers are vacillating on, do I put this capability into my silicon? Which, by the way, might portend to an opportunity for NVIDIA to come in here and put in cards or add-on cards to do that. But it just seems very, very conservative to me. Enrique did say it would start making the impact at the end of 24, which this makes sense, because you're going to see Qualcomm will be in there, and then you'll have Lunar Lake and AMD there. But I know, folks, more questions than answers I have provided. I normally like to be the answer guy, but I'm still doing research on this. Hey, let's move to one that's, I think, even more straightforward, and that is Dell Tech. I mean, what can I say? Dell stock was up over 30% yesterday, and Michael Dell got put in the $100 billion net worth club. It is a good day to be at Dell. And here's the thing: it did not come from a big revenue boost, because revenue is actually down year over year. It was a huge EPS beat, $2.20 versus $1.73. Revenue, they met expectations with a slight beat. They did increase their dividend by 20% for the year, but more than anything, it was the affirmation of the impact from AI and the communication that they could have done even more. They shipped 800 million in AI optimized servers in the quarter, and their backlog doubled quarter over quarter to $2.9 billion, waiting on those pesky GPUs. Congratulations to everybody at Dell. You guys crushed it. You wake up and on a Saturday and you're worth 30% more than you were 2 days ago. That's got to be a good feeling. I had that feeling a few times when I was at AMD, but I don't directly trade in any of these stocks, so I haven't had that in a long time.
Yeah, so, great day for the company. Michael joined the $100 billion club this week on the growth. I mean, Pat, I think I shared when it was up 15% after hours, thinking, what a pop. Only to see I could have been more provocative at 1,000, or what was it? Sorry, at a 30% up just a little bit later. Pat, have you ever? I gotta say, it felt very 1999 to me. Like, the internet's here, and there's an infrastructure company, and we're gonna, listen, Dell's doing some really good things, but it does have a diversified business. It didn't actually grow on a revenue basis.
I know, right?
And so the excitement, the exuberance, people wanting another trade, maybe feeling another company that's going to benefit from this. And no question, Dell is going to be a very important company. You've got, Dell also has, they have the opportunity to be, silicon diverse. They're going to be clearly partnering with AMD as AMD comes out with product. I think they will be, of course, one of the biggest resellers of the hardware. You saw that GPU number, and the fact is, it was very easy to look at the order book and back out at the order book growth. Margin as availability comes down, and Pat, there has to be an indicator, right? We've seen the H100 timeline from 11 months to 3 to 4 months, which is indicative of the fact that they are going to be able to shorten that cycle to filling those orders.
I totally don't believe it, by the way. I don't believe it.
I'm not convinced, but I'm telling you, if I was trying to figure out why the exuberance came off these numbers, remember, good numbers against what they committed to the street. These are adjusted guidance. They beat on revenue. They always figure out how to beat on profit. They skinnied the company this quarter. Again, not really a popular topic, but a real topic. There have been some substantial cost cuts. People love that, though. I mean, look, Meta's stock exploded when the company showed that it was willing to do what it needed to do to beat earnings. Now, there's always the very human element. You and I have talked about this twice on the show, and I'm not addressing that, but I'm addressing the fact that, why do investors get excited? Investors get excited when a company shows it can figure out how to perform even in a tough macro. And Pat, here's the other thing. They did what their peers didn't do. They beat. So even if it was an adjusted number, they beat. They beat the adjusted number on the top. And while others couldn't beat a revenue number, even after a guide down, they were able to do that. So that matters. They were the best performer of their class against the expectations that were set. And Pat, they were able to show very prescriptive data on their AI. And so it's simple. And I mean, look, the profitability per unit on those GPUs can be calculated and tabulated and figured out. And as they move the units, and if they can move more units and move them faster, which is rumor, but there is some speculation that this cycle is being shortened and they can diversify across silicon, this AI hardware business can grow. I just don't know if this is going to be, going back to the Benioff comments, is this margin rich enough that people can really stay excited about selling AI servers? I think the complete set of Dell services and consumption-based private cloud. And by the way, selling into enterprises. All these servers are still, so much of it's cloud. So much of it's just going to the,
I know.
5-10 companies that are
Look
buying.
at Supermicro. Supermicro, I mean, they are 100% box pushers. Okay, that's all they do, and they're up 20-fold in 2 years.
Yeah,
and 100% of what they do is slam infrastructure into cloud providers.
Yeah.
Hey, an interesting exercise. Go do the 5-year stock valuation of Dell, and look at its appreciation, and then compare it to their contemporaries. Dell's up 370% in the past 5 years, and their competitors aren't nearly there.
Well, let's keep on going, Pat, because we are running the 6,600 today, the 7,600. We got a lot to say. Do you feel like maybe we had some pent up?
We did. We could have added 3 or 4 more. I mean, Synopsys added some really cool networking IP. But
We'll talk about that next week if it's not too busy.
Yeah, we should. Hey, let's get into this last one here. Pure Storage. How'd they do, Dan? I mean, storage is kind of, well, NetApp was way up. How'd Pure do?
Yeah, Pure had a solid result. What are you looking at? Well, their revenue growth slowed. They were 3%. So their growth, they at least are up year over year. With Pure, there's a certain subset of numbers I tend to look at based on its business and where it's seeing growth. And that's been one, the ARR focus of Pure Storage. 2 has been their continued focus on being the most liked company in the industry, which has been solid for its customer growth. And then, of course, I've been watching their cloud product growth, which is the Evergreen product. So those are like the 3 numbers I came into this really looking at, Pat. ARR, 25% growth. They've now hit $1.37 billion in subscription revenue, which is just a slight bit higher than Moor Insights advisory contracts. I had to do that. Sorry. Then
Dan, don't undersell me, Dan.
Sorry, I didn't mean to doubt you. Then their, the Evergreen One business saw $400 million TCV in the contract value of the cloud business. And Pat, here's the more important thing: for 100%. So they're seeing their new product, their new cloud product, gaining strong adoption on a year-over-year basis, and their Net Promoter Score stays at 82, highest in the industry, Pat. And I don't know if people fully appreciate how hard it is to have a Net Promoter Score over 80. And so a lot of companies just don't talk about it. I've got 100, but very likable. But in all seriousness, these are the kind of the 3 critical metrics that that I'm paying attention to. What else? I do think that they've been very busy kind of talking about performance, Pat. This is something you and I are very interested in as we sort of pay attention to Signal 65 business that we have and the overall testing. The company put a bunch of outcome related data in their presentation of performance. So I'm got to say, when we talk to Charlie Giancarlo next week, I think we're going to talk to him about these results. I got to ask about this. They put out a 2 to 5 times less power in space, 10x versus existing hard disk systems, 50% lower TCO on a typical configuration, 10x more reliable, 10 to 30 service visits less, 5 to 10 times less labor to operate.
Boy, it sounds like a Signal 65 project.
Hey, Shroud, where you at, man?
I know.
Where you at? We got to test this stuff. But I love that they put this in their thing. And Pat, then they went on to do more. 1 to 2, they basically went on and said Pure Flash consumes 80% less power than, than traditional, storage systems, which again, there's something to do there, but a lot to test here, Pat. But look, the company's doing great. In 2024, they've seen their percent of the Fortune 500 customers rise They're up to 60% now. And they added 349 new customers. So trajectory, very good. Strong company. We'll probably have more after we talk to Charlie, but good week for Pure Storage.
Yeah, their stock is up 35% in the past 5 days, which is eerily similar to the advance that Dell got. I think this is all about AI. I like to call it a proof of life, right? You know, Dan, you and I have talked to a ton of CEOs and CFOs lamenting on, hey, my AI is real, right? Why aren't we getting credit for it? I'm an industry analyst, not an equities analyst, but I'm smart enough to know that the street is wanting a proof of life. Show me the numbers. And that comes into two forms. That's one form that says, this is the percentage of my AI business today, and this is going to be my percentage of AI business. We saw big pops from companies like Broadcom and Marvell. What we saw here with Pure Storage was a great explanation of an 8-figure deal with Evergreen and One from a specialized GPU cloud provider, and that's probably either CoreWeave or Lambda Labs that was an end-to-end piece there. And AI was mentioned. Actually, this, let me scratch that, at least 14 times. The AI is picking up things like the AI in container. But if I look at just the AI, I think this was what investors wanted to see to put this company in the AI category. I'm going to step back. I'm going to end on what I think is a masterclass in growth. That I think Pure Storage, right? That they come out in a niche market when they started with a very radical concept of being very software first and a bladed type of architecture that ended up to be very upgradable, where you didn't have to upgrade the entire storage system. You just had to upgrade the blade or do a software upgrade. And over years, right, there are now block, file, and object storage. They are now on-prem as a service, and then even offering their software capabilities in the public cloud, and that's Evergreen and Pure Fusion. And then layering on top of what a lot of people are doing is they're going after a data management play, which is really interesting. And that's from an acquisition that they made from Portworx. So I could very much see, and there's been a little bit of talk on this, which is, hey, you've got the data there. Why don't we do AI queries right there on the storage software itself? And I think that's going to be kind of the next type of thing that you would expect. You know, we're seeing this from a lot of storage software plays, right? Like Rubrik and Cohesity. And here we've got Pure that's operating, going from a different part of the stack into doing even more software. So anyways, I'll end with really looking forward to our call next week with Charlie Giancarlo, CEO of Pure Storage. Dan, we did it, 1 hour and 3 minutes.
It wasn't as bad as it started. We started out here really wild.
I know we
could have gone like 3 hours. Don't you have a flight to catch?
I haven't even packed yet, dude.
Did you decide which plane you're going to take? Are you going to take the G or the Falcon, or which one?
So no, I upgraded to a G650 as I'm waiting for my G700. So I'm really excited about the 700. It's the fastest production airplane ever. So us getting the 6.5 across the country.
Yeah, I'm working with Lockheed right now to design something. I haven't found anything that I can buy commercially that's quite meets my standard.
What about what's it called? The big Boeing jet?
Yeah, the BBJ is big, but I need something faster. So I'm actually talking about building a fighter jet that has about a 12-seat capacity.
That's cool.
You know, luxury on the inside, pace on the outside. It's like a, what would you call it? It's like the Bugatti of planes. But
Be
in all
careful,
seriousness,
buddy. The IRS is on the hunt here.
on the hunt. Yeah, I'm gonna have it labeled in the order as a touring bus.
It is
With
a
wings.
bus. I
And
mean,
a
B
couple jets.
might be. Isn't B and BBJ bus one of them?
Big
Boeing
bus.
Boeing bus
Jet.
jet.
Boeing
Boeing
bus.
bus with a jet with a
Big.
jet engine.
I don't know, buddy. But this is all good, man. Listen, have a great trip. I'm glad that you backed your trip up with a trip, then a trip. You know what I mean?
Yeah, man. Hey, I appreciate everybody tuning in. Hit that you know what button. I can't say it. Or we'll get like
Hey, look,
deprioritized. Connor, man, how
you're
you
late.
doing, buddy?
Late. Would you sleep past 8 on a weekend?
I love that I love we've got a Gen Z that gets up before 11, you know?
I get up before 11.
Yeah, but you're a millennial who wants to be a Gen X. So
Yeah. I'm kind of
I got that.
Gen Z, though. I'm young.
I know you always want to call me a boomer, but I'm clearly well in the Gen X by
I
8
just
years.
don't want to be trapped in the same generation as you.
Oh, I know you want it. Dude, you're so Gen X you can't even stand it. You just don't want to be the forgotten generation. You know? I get that.
You're triggering me, Pat. I need to go find a safe space.
No, I'm totally going to go find my safe space. I've got to get my luggage packed first, and then I'm going to crawl in my teeny tiny airplane that I wish was a G700.
But yeah, gotcha. All right.
I hate flying Southwest, man. It's terrible.
I fly SWA. Moral of the show. All right, buddy. All right,
See you,
everyone.
buddy.